In this video, you're going to learn one of the key tricks I use to keep my success rate trading supply and demand zones high while decreasing how much I risk when trading multiple zones. I'm talking about combining zones, merging nearby zones together rather than trading them individually like most supply and demand traders do. This trick will dramatically increase your success rate trading the zones as well as decrease your overall risk. Sound interesting? Here's what you need to do. Cast your eyes over this chart of Euro USD. For all you current supply and demand traders out there, this should be a pretty familiar sight. Here we have two rally-based rally demand zones which have both formed close to one another. Now normally, supply and demand traders approach a situation like this by marking and trading each zone individually, like I have above. So, when price returns to the highest zone, that's the first trade. If that fails and price continues falling, the zone below becomes the second trade. However, there's one major problem with this. Price will sometimes spike past the first zone but fail to reach the second before reversing. So not only do you lose on the first trade, you still miss the reversal because price doesn't reach the second zone and provide an entry signal. It reverses in between the zones, causing you to miss out. The second issue is more obvious. When price breaks both zones, which also happens very often, you end up losing more money. You lose on the first trade and then you lose on the second. Essentially, you double your loss. Luckily, there is a way to mitigate these issues to the point where they rarely affect your trading, and that is combining them together. Rather than trading the zones individually, we combine them into one and treat it as one massive zone. Because by combining the zones, we make it impossible for price to reverse in between, causing us to miss the reversal. This can't happen anymore because the zone covers the gap, so price will always reverse somewhere inside. We'll always be able to get in. On top of that, our risk remains the same, even though the zone is way bigger. If we were to trade both zones and suffer losses on each, we would lose 894 points. The spread, getting in and out, would be around 2 pips, which is nothing really, and the stop cushion, which remember is necessary for both zones, would be 150 points. So our total loss would be 894 points. With the zones combined, however, our loss would be 910 points, which is almost exactly the same. So even though our zone is much larger, our loss is practically identical. We've managed to keep our risk similar while at the same time drastically increase our chance of having a successful trade, all from combining the zones into one. Combining smaller zones to create one bigger zone works as you'd expect. You just combine two zones together from the takeoff point to the zone edge. There are a couple of small points to be aware of though. For one, don't combine zones that are really far apart, because that'll increase risk to the point where it'd be better to trade them on their own. Ideally, you should combine zones almost stacked on top of each other. Zones like this, for example. See how these zones are stacked on each other, almost like boxes? These are the perfect zones to combine into one larger zone, as I'll do now. You can see I draw the larger zone in the same way as the smaller zones, from the takeoff point of the upper zone to the lower edge of the bottom zone. This is how you combine the two to form one bigger zone. What's not a good idea, though it's not a major problem if you do, is to combine zones that are really far apart. For example, these two zones have formed way too far apart from each other for us to trade them profitably as one single zone. The gap between them is way too big. In this case, it'd be more profitable to trade the zones individually. That way we wouldn't have to include the gap, which is a huge 500 points. Both zones together add up to 1092 points, including the spread and stop cushion, so we'd actually save money trading them individually rather than as one zone. Now, I can't give you specific guidelines on how far apart a zone should be, but my general rule is, if the risk of the 2, or even 3 in some cases, zones adds up to being significantly less than trading the zones on their own, including the spread and stop cushion, it's better to trade them on their own rather than as one big zone. Like I said, if you get this wrong from time to time, it's no big deal. Just be aware you'll probably be entering with a higher risk. The trades could still work out, your risk will just be higher, that's all. All in all then, combining supply and demand zones is one of the best ways to quickly and easily increase your success rate trading the zones while decreasing risk at the same time. All in all then, combining supply and demand zones is one of the best ways to quickly and easily increase your success rate when trading the zones. I've used this method with great success for years now and it's worked wonders for me and my trading. Try it out for yourself and I'm sure you'll see similar results.